Good morning, traders. It's 8:01 on Tuesday, the 13th of October, 2015, 8:01 a.m. Chicago time, that is. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Not too much going on in the overnight news. Markets selling off. Steady selling in Japan, China, and Europe overnight. Euro stocks down about 1.5%. CAC 40 down about 1.4%, DAX down about 1.3%, and the FTSE's down about 0.86%. The FTSE showing some strength on some takeover news on one of the major stocks. Crude oil slightly higher this morning. China's September trade balance has hit a 7-month high. The German ZOO current situation survey shows 55.2 versus 64.0 expected. That was a big miss. Expectations even worse. Expectations 1.9 versus 6.5 estimated, mostly due to the VW scandal. And then this morning, J&J, Johnson & Johnson, reported Q3 earnings at $1.49 versus $1.44. Its revenue did not beat, however, 17.1 billion versus 17.4 billion estimated. Looking ahead, not much on the calendar today. Quite a few speakers overnight. We had the Bank of Japan minutes released from the September 14th to 15th meeting. We had ECB's Mersch speaking, Riksbank speakers, two of them. We had BOE come out with credit conditions. BOE speaker testifies in front of UK lawmakers. My point is, there's just a ton here. BOE's McCafferty. At 8 o'clock right now, we're expecting Fed Speaker Bullard's comments on the final day of NABA annual meeting. EU Speaker Hill at European Parliament at Bullard's comments came out an hour ago. EU Speaker Hill his comments are expected now. BOE Speaker, Bank of England Speaker Haldane, expected at noon. And then after the market today, after the close, we're looking for earnings from JP Morgan, expecting $1.38, and Intel expecting 60 cents. Other than that, there really isn't any economic data expected during the session. I think the market's likely to be driven by its own technical trading, especially since yesterday was a resting day as expected. So let's switch gears here and look at what we have as far as the releases, as far as the economic data is concerned. Let me put this on hold for a second. There's an issue with the screen here. It's got the wrong desktop. 1 second, please. Okay, this should show you my S&P screen. There you go. All right, so let's start this off by looking at what we expected from yesterday. So here's yesterday's Trader Bite. When you go to about the 10th minute, you'll see that I'm looking for mainly a session that is completely balanced, and I talk about how. So you can see here, I'm saying that the market's likely to chop around in the middle, expecting it to test and retest the point of control, which was the overnight point of control 2007, and for it to not really go anywhere. And that's basically what we did yesterday. Any pushes up, I had mentioned, we're expecting the 2012 and a quarter to be taken out. If it has any oomph to it, 2016 is the area to look out for. Otherwise, the expectation is it would just hold tight inside of the prior day's range. which was Friday's range. And that's basically what happened. Hypo 1 was completely in line. So you can see here, let's get rid of this profile and redraw it later. You could see here that it really didn't do anything. We opened exactly on the point of control 2007. We tested lower to 2002. And we tested up to 2010.75. We basically traded the value low and value high of the day. So here's the value low right there, and value high is right here. It's this the edge of the gray area, and the value low is 2003 and a half. It went to 2002 and a quarter, and value high was somewhere around 2010. It went to 2010.75. Was stuck there pretty much the entire day until the close, where it rallied a little bit. So most of yesterday was very quiet. 673,000 contracts traded. This is about half of what we would consider to be the norm. So let's look at that on a more statistical basis. This chart here shows the daily range, RTH range, pit session only range, and what this profile does is it actually charts out everything that is being shown to the left, these bars to the left, charting them out and showing us what is considered to be normal. So when I extend this scale here, you'll see that what we would consider to be normal is somewhere around right now, for the period going back to 2000 to February 6, 2014. What's considered normal is around 14, which shifted to 19 and a quarter points on the day session, with the edge of normal being 23 points. So what's normal for the ES since a year and a half ago is somewhere between 7 and a quarter to 23 and a quarter points. And what's normal in volume is around 1 million contracts, with the edge being 1.6 million. And yesterday we traded 673,000 as outlined right here. This is the last, it shows you the last entry, which is for this bar here. So you can see that volume is just tapering down. As we rally, volume generally drops, and so does the volatility, and therefore the range. And yesterday was a coiling day. We really didn't do much. I mean, we extended what we did the day before on Friday. We're sitting right on the edge of this massive balance zone from the drop as of the end of August, and we're sitting up here testing. Just above us, there's a gap zone that we carry over from the big drop day on August 21st. So there's a gap here, and we have come up on it, but have not taken it out. The gap is between 2013 and 2015 and a quarter, with a gap close at 2016 and a quarter for the 20th of August. The gap occurred on the 21st, and that's really what we're up against right now. We're just sitting here just below the gap and waiting. If we push up into this gap zone and start pulling into the area above, it's important to note what there is above us. A very wide-ranging day this day. We went to from 2055.75 to 2015 and a quarter. 40 points, 40 and a half points, and you can see as soon as we breach this day, the initial resistance is around the 29 area, and the point of control is at 43.75 above. But so far, we have eased off. We have not been able to push in, and we're remaining in balance after breaking out on Thursday. Because we're in balance, I'm going to draw a 2-day composite here. Oh, let me erase this noise off the chart. A 2-day composite here, which shows us that 2007 remains as the point of control over these 2 days. Again, yesterday's range did not have much volume, did not really facilitate trade very well, and so it's basically an extension of what we did on Friday. Let's look at the overnight. Since we're trading on the edge of the low here, we're trading at 1998.75, which is the lower edge of Friday, and we're starting to cut into the thin zone below. So looking at the overnight session, very thin up top with a lot of volume down below. What does that mean? That means we have a long liquidation type of action. The longs are being pushed out slowly, gradually, and we have built a lot of volume beneath what existed over the last couple of days here. So essentially what the market's telling us here is the sellers are likely to be in control into the session, and that's what I'm looking at as Hypo 1. I'm looking for this market to continue lower into the morning session. It has a lot to do below. If we pull in a market profile chart, you could see that it has some key areas to test. It has a single print at 96.75, and then of course the key area below is 89.75. 1990 even would be the key target, key initial target below. So there's a lot of repair to be done here on the profile left behind from Thursday on the run up, and I think today's likely to be, it's just showing up as the day that we're likely to do that repair work. So that's the anticipation for today. As long as it stays below this 2007, I anticipate that it would likely continue to push lower. So overall, what do we have? We have a market that has been in balance for 2 days, that is resolving the balance. Remember, when the market's in balance, it is coiling. When it's in balance, it creates a lot of volume, and therefore, since in futures, for every contract bought, there's a contract sold, this means that there are a lot of people holding on to positions long that are likely to get squeezed out, or position short that are likely to get squeezed out as we move out of the balance area. So balance leads to imbalance. In general, we see a heavy profile, and when we see a heavy profile like this, especially over over 2 or 3 days, then the move away from this generally is very strong, because there are more and more, there's just a lot more volume that is likely to be caught off sides. And again, the targets below at 91 and 90 even. That's what we're looking for this morning. So essentially, I'm looking for a responsive buyer off the open, because the overnight inventory is short and it's likely to balance out. So if we look at the overnight action, we see that the market is much lower. This is yesterday's close here. This is the prior session's close, and here's where we are now. So there's a strong imbalance to the short side, and then confirmed with delta. You could see the delta here. Remember, delta is the number of contracts to the tick, the number of contracts that are bought at the offer minus the number of contracts sold at the bid. In other words, what the delta keeps track of is the balance between how many people went to market to buy versus how many contracts went to market to buy and how many contracts went to market to sell. And what it's showing is there's an imbalance of 21,000 to the sell side. And in general, when we see that in the overnight session, the market has a hard time recovering, but it does push up. The volume coming in the morning is going to be a lot higher than we had overnight, and we're likely to push up on the open. And then we're looking for the shorts to put on their positions and squeeze it lower. So that's my primary hypo with 92 and 90 being the key targets below. Okay. So you have right there, I pretty much gave you what the context is, what is expected. So the only thing that's left is to see what the market actually does. The extended target is always going to be the next balance area, which is, or the next most recent balance area, which is going to be this 1982.50, right? So if it breaks through this 89.90 area, then there's a lot of room to 82.50 on the short side, and that's where I'll be. So overall, the market's likely to recover and repair some of this thin area before it actually turns up and starts taking out this gap zone and heading for the next balance area upwards, which is 2043.75. So anything below, as long as the market stays below 2007 today, I'm looking to the short side. I'll leave you with that thought. My time is up. Good luck to you, and I'll catch you tomorrow. Take care.